Hi everyone, this is KT here. So today's video is about the trades being placed for the week of 21 July to 25 July 2025. So let's take a look at last Friday, how the market is doing. As you can see in the different sectors, generally is bullish here. So let's take a look at the portfolio. So let's see the past 7 days. The portfolio overall, it's a 2.84% gain. Month to date for the month of July, it's about 13.05%. And for the year of 2025, that's about 69.78%. And since inception, overall, it's about 270.7% here. Okay, so let's take a look at what are the trades that are being placed here. Okay, so we start from 21st July 2025. That's a Monday here. Um, sold ETHA puts on expiring July 25 at a strike price of $28 because on Monday the sentiment for Ethereum is quite bullish, so decided to sell cash out puts for that. So got credit of 0.66 cents and sold at $29 strike price, got a credit of 1.06 cents. Next, the sentiment is also bullish on silver. So sold cash take puts on silver expiring July 30th at the $35 strike price here. Got a credit of 0.44 cents. So the premium is more than 1% of the strike price. That's why uh, chose the dates for silver to be sold as, because it's not a weekly option. It's in days, so have to pick to see which premium meets the criteria of more than 1%. Next, sold STZ puts at 160 August 15, 2025 at a credit of 1.57 because I'm bullish on STZ. It's a beverage company held by uh, I would say that Warren Buffett has this in his portfolio. So this is quite a defensive stock here. Next, bought GLD puts expiring September 30, 2025. This is a purpose is for hedging in case gold actually drops. So got a debit of 0.56. Next, silver is quite bullish, so decided to sell more cash puts on silver, expiring August 8 uh, at $34 strike price at a credit of 33 cents here. It fell short of the 1%, but it's almost close, about 0.99% or 90-ish percent here. I mean 0.99% or 0.9% here. Next, sold more Apple puts on August 15 at $195 strike price. Got a credit of 1.23. So it's actually very bullish on Apple. And in the meanwhile, my portfolio excess liquidity is more than 50% of the NLV. So it's not really efficiently utilizing the excess liquidity and the funds here. So decided to trim it down. So I decided to go into various counters. So after evaluation from Data Roma and also from uh, other platforms like Simply Wall Street and also Finviz and also Trading Edge. So decided to focus on these few stocks. Uh, TDD is a Chinese counter, decided to get some exposure into the Chinese market, and fundamentally it is sound. So decided to sell share stick-up puts on expiring August 29, 2025 at $100 strike price with a credit of 1.72 here. Next, sold more Apple puts also just to trim down the accessibility to make it at least between 35% to 40% in relationship to the NLV. Next, bought back silver puts here at a debit of 0.02 because the extrinsic value has already eroded here. And sold more silver puts at $34 strike price, expiring August 8th, for the credit of 0.31. Next, sold even more Apple puts at 195 strike price at expiration of August 15th, for the premium of 1.24 here. Next, IBIT, buy some IBIT puts expiring August 29th at $58 to hedge against IBIT if it really tanks. So this is just to ensure there is some consideration to the complexity of the portfolio. And STZ brought back the calls here. Actually, this was mistakenly executed. So um, what I did is I actually wanted to roll STZ August 8th to August 22nd. So I bought STZ back at the debit of 3, and then I bought even more STZ at 175 August 22nd at the debit of 4.27. So after I realized this mistake, I sold back the calls at a overall net debit of 0.27 cents. And when I roll over from August 8th to August 22nd, I got a credit of 4.2. Overall, I would say it's probably a $1.20 minus 0.27. It's about 93 cents credit here. Next, GDXJ as the EV has eroded, so I decided to roll it to August 8th at the same strike price for the credit of about 46 cents here. Next, for HIMS, roll HIMS from August 1st to August 8th, got a credit of about $2.01 here. So at the $50 strike price. Next, for $55 strike price, also roll it there and got a credit of about 1.7, $1.70. Yeah. Next, bought bought back HIMS puts at $25, which is a probability of 90+%, but then decided to free up some accessibility to let it expire this week. So uh bought back HIMS at $25 strike price, expiring August 15 at a debit of 0.19. Sold more HIMS puts at 44.5, which is about delta 20 here, to let it expire in this week. So got a credit of 0.23, 0.24 here at the increased lot size and higher strike price. Next, decided to limit my risk for SoFi since it's now way out of the money. Bought back 75 contracts of SoFi at debit of 0.16. Okay, STZ decided um to decrease its strike price to 165 for a higher probability of profit. So bought back STZ at debit of 4.09, but sold more STZ at 165 at credit of 2.30. But overall, it's a net credit here. Okay, to hedge against the August 1st declaration on the outcome of the tariffs, so bought 5 contracts of PDD to hedge. So that's a debit of 0.32. Next, sold more GLDs for a credit of 2.25, 2.13, and 1.49. Because I'm quite bullish on metals here, and if the tariffs outcome is negative, GLD will actually more people will be going into GLD, or more people will be going into gold. So this will be an increase in the stock price. And also when I look at the flow of GLD, where a lot of people are buying calls on this, so it's an indicator that GLD is very bullish. Next, HIMS. S- Initially had stood calls on HIMS at $60 strike price, but HIMS actually increased more than 10 to 15%. So decided to roll it to a later week and then at a higher strike price. So bought back HIMS calls at 1.55 debit, sold more HIMS calls at 1.50 with a higher quantity and higher strike price. Next, Google's earnings. So decided to speculate on Google, and overall was quite bullish on Google. So sold Jessica puts for Google expiring September 19 at 185, and using the premium gain, bought Google calls at different level of strike price here. So it's like a lottery pick to see by September 19, will Google be more than the current price of about $195. Next, decided to further increase the strike price of HIM's calls here because HIM is on the upward trend. So bought back at the $75 calls expiring August 8 at a debit of 1.24, and then roll it upwards to $85 at 0.62, 0.60. Overall, it's still a net credit here. So let's see, bought back. So okay, and then I roll the $85 call from August 8 to August 15 because I'm worried about the gamma squeeze for HIMS that is very near to its earning release. If there's a gap up, right, this calls will actually be a sign. Yeah. So just to prevent this, I roll it 1 week later from August 8 to August 15. And of course, I got a credit of about 0.93. The net credit is about 0.24 for this. Next for ETHA, bought back $29 puts and $28 puts, and at a debit of $1, and also a debit of 25 cents, and uh, decided to roll it to August 8 at the same strike price of $28. So this is to consolidate the position, and also ETHA was bearish at that moment, so decided to roll it instead of getting a sign. Overall, it's a credit of 1.46, but net credit, you just take 1.46 minus $1 and minus 26 cents here. Next, also IBIT on Friday, it was quite bearish, so thought they would get a sign, but at the end of the trading day, it did not. So, but regardless, roll it to August 8 to 1.97 here. So got a credit of about 58 cents here. Same goes for IBIT expiring July 25th and wait to August 8 to consolidate everything. I got a net credit of 1.57 cents here. Also, GDXJ, it was the stock price is going downwards, so my extrinsic value has eroded. So I roll it to August 15 at the same strike price to get a credit of 0.36 cents, I would say. Next, also GLD, the EV has also eroded as uh, the EV has decreased by more than 50%. So decided to roll GLD from August 29 to September 19 at the same strike price. Got a credit of 1.16 cents. And Microsoft is expiring, so I saw that the premium to buy back it's very little, so I have a debit of 0.03 to close this position. This will free up some excess liquidity also. Next, roll GLD from September 19 to September 30. Got a credit of about 48 cents here. Okay, after doing an evaluation of my portfolio via ChatGPT, so it has give me some advices to trim down the positions for HIMS. So I trim down HIMS position by buying back all the calls here with a debit of 0.71, but I sold a lower quantity of calls at the higher strike price of $90 here at a credit of 0.54. And then I also bought $100 call at the same expiration date at a debit of 0.35. So this is a bear call spread here, and I trimmed down the position here. So overall, it's a net debit play here, just to have some to consider the convexity of the portfolio and also HIBs. Next, AAPL. Sold more AAPL as I'm quite bullish on AAPL and also to utilize my excess liquidity here. And STZ sold more STZ puts at 160 because quite bullish on STZ and also uh, bought back 165. So it's a roll down from 165 to 160. Debit of 1.4, but overall credit of 0.64, but there was an increase in quantity here. So overall it's a net credit. And throughout the weekend, ETH expired at $25 dollars. Teams expired, and also ETH expired at $27 or so. So it actually ended at $28. Yeah. So nevertheless, these are the trades being placed. So this week is quite bullish. I think next week when Trump announces the conclusion of tariffs, market will pull back. So my portfolio is prepared for that. And in this situation, we'll sell more puts on defensive stocks that will actually, or any stocks that will capitalize on the tariffs conclusion if it's bearish. Okay. Yep. I think that's all for today. So remember to like this YouTube video and also like this YouTube channel. Remember to subscribe to this YouTube channel and turn on your notification bell. Have a great day, everyone. Signing off here.